By now, you've heard about SVB or Silicon Valley Bank and why it went under, but why is no one talking about how this could be good for the housing market if you're looking for a deal? And we're also going to share a unique perspective on what it looked like for SVB customers in the days before and after the FDIC took over. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best data-driven decisions in these crazy days. You're hearing in the news what happened from the outside in looking at SVB, and let's go ahead and take a look at it from what members of the bank would have seen, people who had their money at Silicon Valley Bank, and we're going to look at their search data just as the bank is about to go under. SVB Go is one of their major portals. This is where people would go. This is their digital banking center. Keep track of money on the move. Get ahead of cash flow challenges. There are some ironies in here now that we look at what's happened. And this is where you could transfer money domestically or globally. As an SVB member, you would log in, and this is where you'd have access to your funds and be able to transfer your money. Taking a quick look at the trend data, this comes from Keywords Everywhere, and it shows you how many people were searching. That massive spike we can see is March, when the bank was about to go under. Let's go ahead and zoom in. We can change the data. Again, getting bigger and bigger when we look at it. Now, when we look at it from a week standpoint, so this is from March 7th through today that we're shooting this video, diving into this week of data, a very eventful week, obviously, as we've seen in the news, we can see that there was a spike that occurred on the 9th. Folks started to log in more than usual. And then by the 10th, in the morning of the 10th, just before the bank was shut down, we can see that that was one of the most popular times. There's only one other more popular time, and that dramatically dropped off. So you can see there was a run in on the bank while there was a run in the number of people logging in, attempting to access their funds and maybe move those funds out before the bank went under. Then the FDIC steps in, fewer people are logging in, and then by Monday, most people were assured that their funds would be there at the bank, and you could see this big spike as folks logged in to make sure their funds were there and potentially transfer those out. This shows you in essentially real time what was going on as a customer of SVB and some of the panic that was felt out there. You can see they came to log in, and we saw this big spike, and again on Monday to get to their funds. So how could this be good for the housing market? The fact that SVB just crashed. I know there's people out there saying this shows you the entire house of cards is about to come tumbling down, just like it did in 2008. And that person that says that, and they'll probably leave a comment below this video, is one less potential buyer out there in the marketplace. And what that does is reduces competition for the available inventory. So when it comes to uncertainty, like we have after an event like this, where everyone, the thought on their mind is, what should we do? What happens next? This is a great time for buyers to be writing offers because there is reduced competition. Furthermore, this is a great way to sift through and see who the real sellers are, the most motivated sellers are. In the weeks ahead, depending on what happens, we may find that some sellers who were going to put their homes on the market may decide to hold off. These would be folks who say they can hold off. There's no big urgency to sell. But the ones who need to sell, maybe they've missed payments and want to cash in as much equity as they can, or maybe they have to move for whatever reason, those folks are still going to list their homes, even in these uncertain times. With reduced competition from other buyers and maybe a crop of more motivated sellers, this would be a good time for a buyer to be submitting offers to see if they could find the deal that makes sense. Two side notes. One is the angriest commenters below videos about market crashes and where things are in the housing market, those folks who are the loudest usually are people who are never going to be able to buy anything. So bear that in mind. Number two, there are going to be some effects on the local Silicon Valley market for sure. Some of the people who lost money as investors who aren't made whole, those folks who had it in their stock portfolio, may not be interested in buying real estate since they've lost money. And some of the businesses that use SVB may have bigger fish to fry and may not be so concerned about going out and spending a bunch of money on a new home. So let me know in the comments below if you'd like to see a local market update, and we'll do a live video stream to talk about what's going on in their local marketplace and other markets that are affected by SVB going under. Another potential positive to the SVB debacle is the fact that mortgage interest rates may start to go down. Immediately after the FDIC stepped in, we did see that mortgage interest rates started to decline, which is good for buyers and sellers. The further we get away from 7%, and I mean the further under 7% we get, the more transactions happen. Mortgage interest rates are volatile right now, and they have gone back up a little bit, and we'll see if they start to level off at a level below 7%. That volatility in the mortgage interest rate could play out well and lead to lower rates. It also adds back into uncertainty, which, as we mentioned, is good for buyers out there willing to write offers in uncertain times. Will SVB going under slow the Fed's sledgehammer on the economy? So next week, the Federal Open Market Committee will be meeting. A lot of folks are predicting at least a 0.5% increase to the Fed fund rate. Now it looks like that may be off the table. People are expecting 0.25, maybe even 0, and some folks are saying that the Fed rate will be cut. And these are new discussions thanks to SVB going under. I know there's many industries out there hoping the Fed is able to slow down on the Fed sledgehammer and engineer a soft landing. Perhaps this will be a way to get to a soft landing sooner rather than later. Do you think the whole house of cards is about to come down, or do you think it's a good time to be writing offers in this housing market? Let us know in the comments below. Make sure you subscribe to our free weekly email newsletters so you get these updates every Sunday. And make sure you check out this playlist where we have market updates plus foreclosure updates, which are becoming increasingly interesting in this housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.